Okay, folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Saturday, June the 5th, 2010. Um, well, we had the jobs numbers that were released on Friday, and I I sat amazed at the response that we saw by the talking heads on CNBC and the so-called professionals, the Harvard grads. I mean, it's just absolutely disgusting how surprised they are by the fact that most, if not all, of those job gains came from temporary census workers. How is this a surprise? Aren't these people supposed to be the best and the brightest? It's no surprise. We've been saying it for months. This rally, we're looking at a chart. Let's go to, all right, the S&P 500 weekly chart. Here's your rally from February, the February bottom of 2010, up to the recent highs. And I said during this rally here, this is a complete phantom rally. Back here was just a complete oversold bounce. But over here, this is a phantom rally. This is all computerized trading. Look at the volume. There was none. And even if you go back here, you could see that the up volume was just steadily declined until you had this counter trend rally, then a failure, and we are going to break below this 1044 level. And we're going to stay there for a while. As a matter of fact, we did last week, 1040, we broke. Well, we came back, and now we're going to probably break down below it again. I am not going to be a bit surprised to see, when we do break the support level, that we head back down to the 869 level. What are the headwinds that are facing the economy right now? You have this BP Gulf spill is not just an environmental crisis, and God, I feel so horribly for those people down there. I really do. But you're not only wiping out the economies of Louisiana, Alabama. You also have Florida, which you have the mayor of Pensacola, Florida, was on I believe it was Fox or CNBC, one of the two, saying how the cancellation rates in Pensacola for vacations they're decimating the economy. And you could expect that type of reaction all down that Gulf Coast. And if that spill does come around the Keys up through the Carolinas, it's a catastrophe. It's a catastrophe. And it could send us quite very well down to a double-dip recession. Now, you don't hear much about this just yet, but it's coming, folks. The conversation is coming, but the key is to get out in front of it. I was saying, get short this market here. We have been short from up here. Go on to my YouTube videos. It's documented. I've been saying it. We've been short. 2010 is a great year for us. And we have also, most of my trading has been to the long side, believe it or not. We have our core positions that are short. But we have also traded around those short positions and made profits in IPSU. We bought it down here when nobody else wanted it. It rallied. We took profits here. Now look at it, pulled back down. This is what we're doing. This is our mentality right now, is that we're enjoying the trend is down right now. To ignore it you're darned to lose money. It's just a foregone conclusion. The trend is down. So what you need to do is, if you want to get long this market, you need to find oversold, extreme oversold stops, and look for that key reversal. Get long and enjoy that short covering rally, and then get out. That's what we're doing right now. So if you want to learn how to trade this way, here's another one. BP. BP back here. We went long, enjoyed the short covering rally. We got out. We took profits because it was extreme oversold levels. We knew shorts were going to come in and cover. This was just ahead of the top kill plan. I didn't know whether it was going to work or not. I wasn't going to take a chance. We took profits ahead of that. And we got out because the anticipation was that it was succeed. Shorts covered. It failed. Now we're going to look to probably get back into this one for another short covering rally. If you're thinking you're going to go short BP right now, you're nuts. You need to wait till something like this happens, a short covering rally, then get short. And I'd be shocked if this company even survives this catastrophe. It's an absolute outrage. So you have the the G20 that met, and they're all agreeing that they're going to lower their deficits. Now, we have the Obama administration who is going to push forward with trillion-dollar a year spending deficits, and now, most recently, is a $200 billion jobs bill. Another $200 billion just pissed away, gone off to whatever acorns turned into now since they've been wiped out. So these liberal socialists just don't get it. And you need to appreciate the fact that they refuse to get it. And he's another Jimmy Carter, and the way to trade the market under Jimmy Carter was short. So stay ready for the next couple of years until he's gone and out to be short this market. Unless, of course, we have a conservative, fiscal conservative takeover of Congress in these new elections coming up in November, and we take back Congress. Absent that, if we get the same moderate Republicans coming back, even if they take control of Congress, you know what? Stay short, because they have no backbone. They have no business being in Washington. I'm sick of these liberals. I'm sick of these moderate Republicans. We need fiscal conservative to get growth back into this economy. That is the only way that you're going to see job growth. And until we start seeing tax cuts proposed, tax cuts passed, growth returning, we need to see the federal and local and state employment rolls reduced. Do you know now we have the highest levels of employment are in the federal, state, and local governments? They outnumber private workers, the private sector. That is a huge sucking sound of inefficiency. They're taking efficient money out of the private sector, bringing it into the inefficient government sector, and they're sucking this country dry. They don't get it. So the game plan, we're sticking to our what I've been saying since back here is we need to stay short. Let's get back to the S&P 500. Back here, even back here, we need to stay short this market. When you have the federal government that has a complete attack on the economy and they don't get it, why fight it? Learn to short. That's what we're doing. And there's no reason why you can't get long this market, but you need to be selective in your trades. We have long trades on right now, but they're selective. They're extreme oversold trades. I run screen, and I try to figure out which stocks have the greatest probability of heading higher. We look for, if we're going to go long, and when the market's in a downtrend, we're looking for those stocks with the best risk to reward. Right now, we're confident in our short positions. Now we're going to worry about our downside, because the upside will take care of itself. We don't want to get long of stocks that are just beginning to get sold off. As a matter of fact, I got an email, oddly enough, from my father as well, too, on this, but an email from a subscriber. I want to get long of U.S. Steel. And he knows my philosophy, and my father, too, same thing. He knew my philosophy. Listen, U.S. Steel is breaking support level after support level. Where's the demand going to come from? You have a dollar that's rallying, which means pricing for steel is going to get weaker. So why do we want to get long of U.S. Steel? If anything, it's short. So my father listened. I hope my subscriber listened and didn't get long of U.S. Steel, because by the end of the day, it was down $3.29. At that time, it was just opening up, and it was down a buck or so. So you really, catching a falling knife. Stocks that look cheap, they aren't cheap. They're not. You have to take into consideration the forward-looking earnings, and forward-looking earnings on U.S. Steel are not good. You have growth in the United States; it's not there, hasn't been there. Growth in China is slowing down. Growth in Europe, forget about it. So where's the growth going to come from? You have, if you want to say Brazil's raising interest rates. They're going to put the chokehold on their economy. Where's the growth going to come from for steel? So we need to be smart. This looks like it's an oversold stock. It's not. So please, I strongly suggest that you take advantage of the 14-day free trial offer. Join the Contrarian Trader. If you don't like the service, cancel it out through your PayPal account. Okay, that's the best offer I can make you. Learn how to trade short these markets. Is it too late to get short of the RTH, which we've been short of since back here at 107.37, when everybody wanted the RTH? I was saying this is unsustainable. Go back to my video. unsustainable. This is going to correct, and it's going to correct horribly. And sure enough, look at where we are. We have a great profit in the RTH short. Is it time to get short? Can you still get short this? Yes, you can, but you need to choose your timing properly. And by all means, shoot me an email if you have a question or want to get short. Check my website for my phone number. I have a revised phone number, new phone number. So please go to the website and check the phone number. It's brand new for even those subscribers. And if you have any questions, please drop me a line, drop me a call, and I'll be more than happy to discuss our service with you. And that's it, folks. I'm going to be heading out to the Hamptons today. Yeah. And I hope everybody has a great, great weekend. And again, if you have any questions, please shoot me an email, drop me a line, and I'll be more than happy to discuss it with you. Okay? Have a great weekend, folks. Bye-bye.